Many analysts are predicting crude oil will hit $100 a barrel by summer. The hardest thing to do in trading is to set aside your bias and trade what you see versus what you feel. Hey everyone, the professor here with your crude oil analysis Sunday market open. Now I am a little under the weather, as you will probably tell by my voice. So this will be a shorter video. Just got back from 12 days in Europe, but I want to give you some value heading into the Sunday market open. So we can see right here using the Renko charts, I am on the weekly time frame that we have begun to paint a brand new green candle on the weekly. If we change that Renko candle to a normal candle, this is what we are seeing on the weekly time frame. So here is our last week's candle, and you can see here that we are approaching some form of resistance. So what I want to do is I want to give you zones on this chart. So I want to go back to Renko, and then what I want to do is I just want to go here, and I want to give you these areas of concern for you to look at. So I'm just going to go ahead and grab a thinner line. You can see here that this area was previous support here, resistance here, and so we are cautiously in that weekly area right now, okay? Sorry about that. You will be dealing with a little bit of coughing during this video from time to time. So what I want to do here is I want to go ahead and get rid of this arrow, and I want to go back to the regular candlesticks and just to kind of show you that resistance area, okay, right here on that weekly time frame. Okay, now again, this area up here is where a lot of the analysts say we are going to end up by summer, and obviously down here is where consumers want price to drop, so gas prices can start coming down some, since usually during the summer there is a heavier obviously traffic and more people traveling, so there is more demand for fuel. Okay, so let's start breaking this down over starting at the daily time frame. And so these are these two areas that we are going to kind of focus in, and I'm going to go ahead and get rid of these arrows in here. And so again, the first thing we want to pay attention to is that this is going to be this area where price on the daily is currently at resistance. We will see how price will react in this area here. It is pretty safe to say, as we start looking at these charts, okay, that if we break that area, then 100 is going to probably happen sooner than later, okay? This is an area here at about 86.90, and then we've got another major zone, probably about 89, and then we've got this area right up in here, which is 93, and then we're going higher. So we are going to kind of trade what we see, as we always do, and as we do in our trading club as well. So I'm just going to mark these areas, and then we're going to begin to look at this on a smaller time frame, just to give you that extra value. Okay, so let's enlarge this. Let's start heading down to the 8-hour time frame, and let's go ahead and start looking at what price action is telling us. Okay, so we can see here that we have done now a kind of a full teacup back into this area right in here. Sorry about that. And so we need to see what price is going to do and how it's going to react in this area. Okay, we only have two options. It's either going to reject and we're going to see some forward movement down, or we are going to close above, kind of like we did over here, retest and then go up. That's what we would expect over here in this area as well. So as we begin to kind of zoom in, okay, we begin to see price action here. So we have these two key levels, which is 83, and then I'm going to give you this lower level for now, which is 80. Okay, so we've been kind of between this 80 and 83 here over the course of the last week. So we have to see what price does, and this will begin to make sense as we kind of drop into lower time frames. Okay, so let's drop now to the 4. We can see here that as price closed, kind of made a doji candle in that area. And on the 4-hour time frame, again, we can see these higher highs, higher lows, higher highs, higher lows. So the market closed here. So it did not have an opportunity to see if we were going to make a higher high, even though this candle here is a little bit of a higher high than here. So I'm going to say, yes, we did make a higher high in this area. Okay, we did make a higher high in this area right before market closure. So we are going to play off of these areas here, and then I'm going to jot down 84.77 as the next major target. Okay, 84.77, 85 as the next target if we close above 83.20 or so. Okay, so what I want to do now is break this down into the hourly. Let me get rid of this circle here so we can begin to see kind of what is happening. Okay, on a smaller time frame, I'm just going to go ahead and mark this as 85. So we are going to be focusing in on this circle area right in here. First thing I want to do is I want to label this as the gap. This is where price closed. This is where price closed. And so we are going to wait to see what price does with Sunday market open. For those of you inside of our trading club, unless my condition just turns worse, I do plan to be on live for that 6 p.m. market open analysis. Those of you that are interested, you can definitely check out the website information in the video description area at the end of this video. So we are going to kind of see what price does in this area right in here. This is going to be pretty crucial to see how price reacts in this area. So let's bring this down. And so this is going to be our gap right in here. So now we're looking for a couple of things. If price gaps to the top side, okay, usually what happens is that price moves up towards the next major area of, in this case, resistance, and then comes back down to close the gap. If we gap low, vice versa. Price will usually come down and run away for a while, okay, and then head back up to close the gap. Keep in mind that gaps do not necessarily close in a few seconds or minutes or hours. These gaps could stay open for London session 24 to 40 hours or longer. So you don't want to over leverage. And the rule for me on gaps is we must see, at least I must see in our group, we wait for at least 50 points or more to enter our first position. If there's a gap of 50 points or more, to trade the gap, understanding that we will be holding this position until the gap is closed. So it's a very small lot size. It's a lesser contract. For example, we trade a couple of minis versus a regular CL if you are a futures trader as well, like I am, so you don't get caught with holding this too long or being in drawdown for too long. Okay, so again, this is like extra gravy on a Sunday if we can grab some pips, some points on a Sunday gap analysis. So at this point, what we are going to wait for is to see how price reacts in this area. The next lower zone to the bottom is going to be right here. Okay, so if we reject 83, then we're expecting about 80 price to come right back to about 82. Okay, right back to 82. So this is going to be a crucial point right here for Sunday going into London session as well. Are we going to gap up, down? Are we going to break 83 and head up to about 84, 50 or so? Or are we going to reject and start coming back down towards 82 and then later 81? Okay, let the price action dictate your move. And again, for those of you in the trading community, I'll keep you updated on whether we're buying or selling from these vantage points. Okay, I hope you got some value on this much shorter video. I am going to get back and get some rest and deal with this cough, which eventually caught up to me from our 12 days in Europe. Okay, if you have any questions, drop them down below in the comments and I will get back to you as soon as possible. Happy trading and have a great week.